Oh, what's up, people? Hope it's sharing. Yeah, one. Okay, cool. So what are we seeing here? We're seeing a winning day. So, so these are the two trades that I took today. It's like only two trades. Risk management is constant to 0.5%. I'm not talking about a percentage, 0.5%. And both of the trades got in live, and I didn't trade after that. I didn't even look at the charts after that. So that's one good discipline that I'm following, right? So like 2 days, it's been good. Keeping risk management on track, which I mean, like it actually improves your psychology and improves your mindset. I feel good right now because I'm following strategies. I'm following my risk management plan. But still, I definitely say I'm not following my plans 100% because this was the first trade and it never came to my stop loss and I closed at negative, which means I have a fear of losing. So, which is I should not be having, right? So that's one thing that I need to fix. And the other things, right? The other things are basically the same. Keep the risk management on tight. You know what I mean? Like this was around. I mean, like I had this first stop loss. To be honest, I had this first stop loss about this high. This was my first stop loss, which means the rest of our it was like 1:1. If I can, I mean, there was no risk reward to be honest. So my first entry, I wanted to like target this zone and get out of the market. I just wanted like 1 to 2. That's it, right? But you know what happened? I closed on break even because I thought the price is gonna reverse and it's gonna hit my stop loss. But what did I see here? That is a that is a 15 minutes fair value gap up here, and also price sweeps high, and also this is where it gets interesting. I call this uh, SHBD, which is stop hunt before displacement, right? I also put a little cover on top of this because that's like the height that you need to be protected. Like it's just for the psychology part, and it works really good. So yeah, it happens, right? These things, like it gives you extra confidence, but it's not really gonna help you in any ways in trading. But it's just for the understanding. And as market opens, I wanted to see candle close below this. If it happens, I'm gonna need to enter the first shots, right? So here's what happened. Like once this got inverse and it created a huge fair value gap, and I know for a fact that the price is never going to come inside this fair value gap, or if it comes there and it's going to reverse. So that's how it is. So it's practice. Every single day it happens. So whenever you could just go back to this, if you're looking at it, if you just go back to sleep, and if you see if the price comes back to this fair value gap again, there's a high chance of it getting reversed because the previous day high has not been swept yet, and previous day low is not has been swept yet, which means there is high possibility of going either way. So this is one thing that I learned throughout my trading, and this one thing is this. So I should be entering somewhere. I should have entered somewhere on here and kept my stop loss at the same place because even if it hits my stop loss, I'm not gonna lose a lot and I can take another entry because I have $2 to $3 risk, which is 0.5% per day. I can risk 0.5% per day So, and I also can take two trades per day, which means like just two trades, and after that, no trades. Just watch if you want, or let's just go close it, come back tomorrow with a fresh mind. So that's one of the strict rule that I need to follow, and I'm trying to follow. And this is one thing. Yeah. So I should have entered somewhere around here, but I ended up taking the trade down here, close the trade break even. The moment I hit break even, this was like a good displacement candle, to be honest. And it never closed, and it came back up and hit my stop loss in like no break even trade. Yeah, that sucks, you know. Yeah. So once it hits my break even, the last candle that hits break even, dude, I'm telling you, like literally, look at the next very next candle started displacing, and I felt like, wow, I got manipulated. So, anyways, we all good. One of the main reasons why I break in the trade because price came back to this low, which seemed like actually like it's not a strong low, but you know uh, there is high potential chances of price reversing from that zone. So I just wanted to like break in the trade because I already like I already missed my first rule, which is like I need to write down everything, every single plan, every single risk. I mean, like, how much risk I'm gonna take, and what's the trade that I'm gonna take. Everything should have to be written before the trade. If I don't do that, I'm not gonna trade for the trade. So that's one of the new rules that I've been added to my arsenal. And so yeah, this was the first trade, and I shouldn't break even that trade. This happened yesterday, literally yesterday. I'm gonna tell you. Wait. So this happened yesterday, right? So 12 contracts, the price hit 1:1 and came back to break even. Break even, I closed it on break even. So yeah, if I were to like let it run to my drawn liquidity or like or the based off the risk reward, I would have just made a lot more. And to be honest, I don't know how much profits I'm at. I didn't see my P&L yet. I'm not gonna see that until I get the congratulations email from my fund of futures because P&L is messing my head, and I really don't want to like look into the P&Ls anymore. It's just model based entries. Risk is going to be standard take profit. I don't care about take profit, how much I'm going to take. It's just basically based off my route plan, or like based off the risk reward, or based on the liquidity. It's going to be based off that. And today it was this happened actually, like the first trade break even, the second trade with three contracts. So I should have scaled up more, to be honest, but I didn't do it. It's all because of my weak psychology and fear of losing. So I need to change that, and I need to accept the loss for the day and just move on, continue with what I need to do after that. And yeah, so this was the second trade. Second trade creates a fair value gap, and this is where I entered. And price, I know for a fact that the price is going to go inside the recent fair value gap, and it's going to come back down. So because price has a break structure and also creates another break structure up here, which just changes it a little bit, but like a break a structure, right? Like break a structure. This is the market structure shift, and this is the break structure. It's like super tiny, but it's okay. So came back from the fair value gap, and I know for a fact that it's going to reverse once this displacement confirmed. And like you should not get manipulated by these kind of lows. Like once price hit the low, look at this. What happened? Literally, like it's waking up. It's the London low. That was my first target, to be honest. The first trade, if I were in the first trade, I would have closed the first trade up here. But it's okay. So So as price started moving down, I just wanted to close a trade at 1:2. It's just risk to reward ratio, risk to reward plan. So I just closed it based off risk to reward, and I closed this trade profitable, which was something that I should have done a long back ago, and and I should have actually did this. If I were not, if I did really did this, if I really did this, I wouldn't have blown most of my accounts. I still have my simulated funded account. I still didn't take a trade after that, and I'm not gonna trade it, and I just want it to be there for a while, and until I pass my next account. So I want it to be there because I just I just don't wanna uh, lose my confidence. Like I just know for a fact that that's a simulated funded account, and I still can't take a payout if I come out of the drawdown, right? So that's one thing that I need to like you need to know, and that's one of the good psychology that I have for now. So that account is just basically, how to say this? It's just a it's just a constant reminder that I can really make it. I can really make it. So I'm not lose that account for now. So let's see how it goes, right? Like I'm not gonna lose it. I'm not gonna trade on it until I pass the next account. So which means it will be a good confluence, and after that I can trade that account. All my mental thing is that I just want to get out of the jargon from that account. And if I could do that, even if I'm gonna hit my rock bottom the next time, I know for a fact that I came out of a huge run and I can do it again 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 and again and again and again and again forever. So that's one thing that every man should have in their head, and that's one thing that separates from 90%, 99% and that 1%. So So I'm done. And tomorrow is Friday. I probably should not be trading if I didn't get an A plus setup, if I didn't write my structured plan on my note before I take a trade. I'm not gonna take a trade. So if I get an A plus setup, then there will be a trade or else no trade. And that's it. Adios.